Okay, go ahead.
We're ready to another Sunday sermon with your host, Mr. Banks, and no rest, no premium. No one else call is financial advisors. It's taken as financial advice. Entertainment only.
This is entertainment only. Have free Nardsy. Hashtag free Nardsy. This is attempt number 3. So third time's the charm here, guys. Sorry about that. A couple malfunctions there, but we're going to hop right on into it, condense it even more, get you right to the meat and potatoes, get you on your way. Guys, one thing I want to show here on just this SPY chart before we get into any of the macroeconomics of different economic data and earnings coming out this week that are equally as important as to what the chart is telling us. What is the chart telling us here, guys? I have this bear flag drawn, right? It looks great. We had a very nice fake out breakdown and then basically a retest and then go back right into the bear flag, right? So you would call that a fake breakdown, fake out breakdown, whatever. Okay. Super simple. What does everyone really need to be noticing here, right? From 615, 617, excuse me. From this date, we've been above 370. Okay. And we've been below 390. Really. Okay. Every time we touch 370, we went to 390. We went to 372, 370, call it. Went to 390. Went to 370. We went to 385. So guys, what is the trend here, right? The trend is your friend. The trend is we're range bound. Very simple stuff. Okay. Very simple stuff. So now what comes next? Probably 390. Okay. Probably 390. And do I think my personal bias is this? We probably chop in this range until next week's FOMC, which is on the 27th. Correct, Justin? 27th.
Yes, the 27th.
Yes, 27th. And we always know how we play the FOMC, a couple fake outs, rip higher, sell off the next day. Okay. Am I saying that's going to happen again this week or this next week? No idea. Okay. But that's what has been happening. And that's what a big catalyst that I believe could actually curate the move out of this channel that we're in. Okay. The move will be big, guys. This is all just basing in here. It's what you call basing. Okay. It's ping pong in between levels, right? Just going up and down, up and down, up, down. When it decides to make a move, it will be big. Okay. Whether it's upside or downside, it will be a big move. And that's where you want to position yourself correctly. Okay. So as of right now, you just know, listen, calls off of 370s area and puts off a 390 to 393 area until it doesn't work anymore. That's what you have to tell yourself. Okay. There aren't breakouts right now. There are no breakouts. Okay. It's just ping pong in between levels. So just know that. Okay. But we're still technically in this bear flag. We're still technically underneath the 50 MA, which is this purple line, which I think comes into play sometime this week. Okay. It's about 392-ish area right now where we see, where the high candle where we had 392.94, right? So 393 area, lots of congestion up there. Now we have an MA sitting right there. So it would not surprise me if we go up and test that at all. Okay. For me personally, I think that'd be a good short opportunity. Why? It's major resistance. It's a triple top and there's an MA. Okay. Now I'm not saying we're going to go make new lows from there, but from a trade standpoint, either a 0 date or to, I'd say 3 days, you would be safe to think we would see some selling off that level. Okay. Just like if we went right down to, 370 to 374 area, I'd be looking at the reaction to likely take a stab long too, right? But I know this level is weak. So what you would want to see is maybe a dip to 372, reclaim 374. You can get long to probably 380, right? So that's how you want to play that range, guys. Now let's move on to the macro stuff, right? What happened there? The good stuff. Now coming out this week, very quiet week as far as the Fed. We've had the Fed gone out and spewing garbage right out of their rear end for the last 2.5 weeks. Hot CPI print, et cetera, et cetera. Okay. This week, nada, right? Nada. None of them speak, which is probably the best thing. Okay. Now, since none of them are speaking, okay, the one thing that we will look at, we'll talk about it next, is there are going to be earnings coming out. We're finally going to get a couple blue chips, large caps, whatever you want to call them, right? I believe it is Netflix and Tesla. It's next week, which are big, couple bank names too. We'll go over those. But I do want to see what I want to see existing home sales. I think that's an interesting stat because, with the Fed raising their rates so much, okay, and now there's talks of maybe a full basis point hike for their next meeting because they can't seem to get CPI under control or inflation under control. Right? You're thinking at least another 0.75 minimum. And if they do a 1, it was talked about after the hot CPI print. So let's see. We've seen what's happened to the mortgage rates, guys. So the Fed funds rate indirectly sets lending rates for the banks indirectly. Okay. But it pretty much is direct. You've seen the mortgage rates jump significantly. Okay. And shout out Inkling. He posted a huge article in our chat, I believe, about the Chinese real estate market, which is something that we need to play importance to. So thank you, Inkling. Guys, he's a professor. He's a smart guy. So when he posts stuff, you should read it. Okay. But it's very good stuff to read. Basically, people aren't wanting to pay their mortgages out there in China. So, and we are in massive debt to China, FYI. So that matters. But for at least us at home, right, we're going to look at building permits. When are these housing starts, right? The builders index. This is all basically a lot of the real estate market data. Then we have the jobless claims, okay? Jobless claims, which are always important. Why are the jobless claims important? Because the Fed's toolkit depends on 2 things. What? CPI, inflation, and what else? Jobs market. Okay. Then the following week, as far as economic data, we have the price index year over year, which is important. The consumer confidence index, right, is all good. And then we have Wednesdays, the FOMC, and you see the Fed chair press conference, guys, because he always talks after the FOMC meeting. Okay. And then right after that, we have gross domestic product, which we had a negative print the first quarter. If the second quarter comes out negative, by textbook definition, that is a recession. 2 consecutive quarters of contraction is basically what that is. Okay. So it'll be interesting stuff. The following week is going to get pretty nutty. I think the tail end of this July month, it gets freaking nutty. Okay. But as far as next week, though, the economic data, nothing crazy that's going to give us like CPI moves in the pre-market when they come out, stuff like that. But stuff you want to gauge, guys, you want to understand the macros of the market. Okay. It'll help you understand the bigger picture. Even though we had a hot CPI print, right? We're not going to new highs. We can go up, right? But we're not going to new highs. Okay. Just like we were talking about in the chat, guys, just because we had, CPI print and we ripped up, that's a perfect example of why economists are horrible traders. Okay. I'm going to say it again. Economists are horrible traders. Okay. Because with all this shit show that's going on in our country right now is inflation, debt, negative GDP, foreclosures, housing rates, or, all that shit. Like you would think the market, SPY should be at 0. Okay. Right. That's what you think. That's what you think. Okay. But it's not. Okay. You're a trader, not a predictor. Okay. Trade what's in front of you. 370 held on the CPI. So you take calls. Really simple. That's as simple as it gets. Everybody wanted us to crater, and anybody that bought puts down here got annihilated last week. Okay. Stop thinking about where the market should go. Okay. And let it tell you where it's going. Okay. And react quickly and swiftly to the information in front of you. Okay. That's it. Economists make the shittiest traders because if they were great traders, they wouldn't be economists. Okay. Just think about that. Now, because they'd be millionaires off an island somewhere if they could predict where the market was going to go right when news drops. Okay. Now, sorry, want to get off of that tangent for you guys because it was important last week where a lot of people were very confused and why we're ripping and why we're this and the emotions were coming out. And I could see that a lot of people were getting into positions because their bias was telling them to get into a position, not because of what the chart, okay, or what the trade plan was telling them. Okay. Very important to remember that. Okay. So we covered the economic data. Now next week we got what Tesla is on 720, which is Wednesday. Now this is an interesting earnings play. I'm going to touch on it. You guys know Dan in our chat, admin JT Gladiator, has the ER Lottos chat, runs a small account chat, guys. They crush it in there. So shout out Dan. But get in there and he'll be posting something tonight. I believe he's going to be watching Tesla, Netflix, and did he say IBM?
Yeah, I believe IBM.
And
he's going to be making IBM, Netflix, and Tesla. And he said he'll be making a video. He's just a little busy right now, but he'll make a video out for you guys tonight.
Bingo. Yeah, he's out with his wife in the afternoon with the kids. So let him enjoy the afternoon, but he'll get into it tonight. And we'll make sure we get that posted to you guys and we'll get the sermon to you guys as well. But for Tesla, for me, guys, from just a very macro outlook. We can look at the chart here. Okay. What I see is this. I mean, basically, you pretty much have what do you want to call it, Justin? Just like a, oh, well, whoops.
Real quick. Dan, we could see you. Just want to let you know.
Oh, yeah, Dan, we can see you, brother. Looking good, though.
Yeah.
Sunglasses on the head, brother. Well, what the hell is happening? This is what I would just be seeing for Tesla, right? Like, it's getting tighter. And what do you see here? You see massive consolidation in this range, right?
Little wedgie.
Got a wedge forming right here, right? So to me, this could go either way, right? And this is what I'm thinking as well. This is what I'm thinking as well, as far as what's going on with Tesla, what's going on in China, who produces the majority of their cars, right? Or like, where's the manufacturer located, right? China. I mean, I think that's the biggest Model 3 hub, if I'm not mistaken. I'm not a Tesla bull or a maniac like a lot of these guys, but I know a lot of Elon's fate depends on China, and they're shut down and they're still worried about COVID and et cetera. All those things, right? That's what I'm thinking about. If we go into a recession, who's buying a luxury car like a Tesla? Okay.
Yeah, they're only going up in price too.
Yeah, they're continuing to raise prices too, right? So they're not getting cheaper and money's getting more expensive to borrow. Okay, just something to think about, right? Just something to think about. So this is definitely one to keep on watch. I know Dan will have an amazing IV play to play on this, because I think the IV would be great on this. That'll get juiced up into Wednesday. Ideally for me, I mean, if you're really bullish on their earnings, which I'm not really, but you would want maybe a down day into this, 3,670 level to take some calls. And then if we do get some upside at all this week, like SPY going to 390, 393, or SPX going to 3950, that would probably take us back up to the top of this range, right? So not only you get the IV pump, but you'll get the, the upside move too, if you're in the call side, just advertently on the downside too. If we get a bump up, like maybe we gap up tomorrow and we're up here 748. Okay. And then we don't think it's good earnings, so you buy the puts, right? Just, that's how Dan likes to play it. You'll see it. He'll explain it more tonight, but that's my mind. Justin, do you think anything different, or you have any other info that you want to share as far as what you think?
We have the split, so I would only assume that we continue rising. We're putting in lower or higher lows. So
yeah, I do like the higher lows. From I guess a technical, this would be a little bit more on the bullish side, right?
Yeah,
just having these
from the
higher
information and everything, and then also the split. So
there is split. Yeah, the split 3-1. So yeah, I mean, we'll see. We'll see what happens. Plus, I mean, there's all this.
The chip, I didn't. Sorry, my bad. Another thing is with the chips. Obviously, they need chips for their cars. That's going to get a good bill.
Yeah, and then that bill's dropping this week, supposedly, right? So
I think it can have some influence on the EV market.
Oh, 100%. It has to, because they're full of chips.
Yeah.
So yeah, that's one that's on watch this week for sure. And then the other one was what I think Netflix. He'll go over Netflix. And all you small account peeps in there that are completely rocking it, that small account channel. You guys crush BAC. I think they're before market. Maybe is Brian in here? He might know. He plays BAC like we all play SPY. Yes, sir. Pre-market, Brian? He says, yes, sir. So it is pre-market. Yeah, pre-market. Okay, so this will be interesting, right? Why do you want to know what the banks are doing? You got Goldman Sachs. Bank of America. You got Goldman Sachs as well. You got Charles Schwab. Okay, all tomorrow. Why is it important to know what the banks are doing, right? If rates are rising, okay, their pool of candidates to take out money to afford a higher interest rate is much smaller. Okay, how do they make money? Off interest, off creating new money, loans, personal loans, auto loans, home loans, et cetera, et cetera, et cetera. Okay. Also, they see deposits. Okay. They see credits. They see debt to income ratio. They see it all, guys. Okay. So be curious on their guidance, right? Citigroup did guide up pretty well. Justin was talking about.
Yeah, I mean, if you guys saw a major candle on that, and then they guided up. So, they say that the higher interest rates are.
Oh, I got it. Yep. They said they're to me, I think that's bullshit, but it sounds good on paper. They said they're making more money off higher interest rates, but in theory, yes, but you'd have to have the same level of demand for the money, right? So if people can't afford a 6% mortgage loan or a 20%, I mean, I don't even know what personal loans are right now. If you have great credit, you probably get under 10, but if you don't, probably 10 to 20%. I mean, whatever, auto loans have got to be 4% now, I think.
This is real quick. This is what they said from the CEO. In a challenging macro and geopolitical environment, our team delivered solid results, and we are in a strong position to weather uncertain times, given our liquidity, credit quality, and reserve levels.
Okay, so what I hear from that is he's saying we're going to be okay when shit hits the fan. That's what I hear him saying.
Yeah.
But it sounds on paper like everything's going to be fine, right? Sounds good. But what he's saying during uncertain times, right? Shit's going to get bad. Is what he's saying. I mean, that's how I take it. Justin, if you take it any differently.
No, that's exactly. I mean, he's saying that to weather uncertain times. So yeah.
Yep. So you see here, I mean, massive. I mean, that's a massive candle right there off that earnings. They beat, obviously, volume was immaculate. Right into this. I just did a very quick, guys. I did a very quick, just the swing high to the swing low here. Right. And you saw what, right back to that, like you guys, these kids call it the glizzy zone. I don't fucking know.
I call it the glizzy.
The glizzy zone. The 61, basically between 50 and 70, 78.6 or whatever that level is. I like the 61.8. That's why I put mine at blue. And I mean, like it basically closed like freaking 14 cents off of that level. So pretty close there. If BAC and Goldman Sachs and all them shit the bed, this could be a great short opportunity, right? As the buy short, if they all do bad, and they'll could take Citi right back down because it's just super overextended.
That's a gap up, huh? As well from the bottom.
Yeah, this is a gap. Yeah. Oh yeah, right here.
Oh yeah.
Right here. Yeah. Mm-hmm. So you have you have like it's a $2 gap, but on a Citi stock, I mean, Citi's their cost of contracts are so cheap that if you move $1, your contract will go crazy, right? So, Inkling says, yes, the bank's cost of funds is higher as well. That is true. Okay. So that's why I truly believe this week, I keep clicking the wrong one. As far as Goldman, Schwab, and then Bank of America will be important for us to watch this week. Now, Netflix, they're talking about raising prices. They're going to cut down on people using multiple accounts. I mean, if you just look at the chart, I mean, this thing has just been beat to goddamn hell. I mean, this is like an 80% drop. Not quite 80, but I mean, pretty close. 700 to 162. That's not good. Okay, you have two huge gaps to the upside, which the perma bulls are all targeting, right? They see all the way up here 500 from 450, then they see what 240, 240 whatever to 350. Okay, when did all these drops come? Earnings drop. Earnings drop. Here comes earnings. What do we think happens?
Pop.
I have no idea. I have no idea. I mean, it would make sense to bring it right back on down here to 100. That's just me. Just gap it down to 100. So let's see. I have no idea. If people start canceling Netflix, okay, right? Because basically when you come into a recession, the hierarchy of needs comes into place. This is why real estate is always a safe recession investment, because the last thing people will continue to pay in their life is for shelter, is for real estate. Food being last before that, and then any other extracurricular stuff before that, right? They'll start cutting out on like hospitality basically and dining. Those things people stop those right away. Okay, that shit they can save money there. Then travel, they're not going to get on airplanes to go travel for hotels. Okay, so hotels you want to look at is any of the casinos in Vegas earnings this week. I believe there is on Thursday is Sands, I believe, Las Vegas Sands, LVS. And then the last being real estate, right? So food. So look, Netflix, man, I mean, what? It started at like $7.99. What is it, like $14.99 now or something? I don't even know. They charge me every month. They probably their favorite customer. But It'll be interesting on the guide here. It'll be interesting on the guide. I will tell you this. Dan played these last two earnings to a T very well. I was with Dan on this earnings. It was the first earnings I had played in years. Okay. And we had the puts. The IV jumped and we dropped into close. I sold because I'm not a gambler when it comes to the earnings. And we gapped down like 100 points. And those would have been a salary's worth of payday. Okay. So then he killed this one. I know he took the puts there too. I think some of the people held some of the puts through that too. Right. So pay attention to his ER channel, pay attention to his video tonight. He's going to explain to you how he plays these. I mean, he's pretty freaking good with them. Okay. All right. Now, what? Yep. Okay. That's what I have for the earnings. Okay. So I think, guys, if Tesla and Netflix, are well, and the banks do well, right? And the banks do well, then that would give us room, right, on SPX. We're going to look at SPX chart to come get back to this 39.50 level, right? Because right where the 50 MA is, right where this high is, or 39.25 above 3,900, right? We're at 38.60. We got about 100 points upside possible. Okay. I think it's possible that we do get some of these things to get us a pop back higher, right? Of course, everybody's staring at this gap over here. Okay. Sheesh. Let me see. IWM. I want to talk about IWM because IWM is important because it's small cap, right? The Russell 2000 small cap stocks. Where is it? Oh, there it is. What I see here, IWM. Okay. We still got our short swings. I basically just seeing this right now. Wait. Yeah, I have it. Jesus. What the hell is happening? Right. I mean, I'm seeing pretty much this right now. Okay, ugly there. It's getting very tight. It's getting tight here. I think we're able to have a pop. I think the 50 MA on a lot of these are in play. You guys have noticed the 50 MA has been right above at some big resistance levels on a lot of these charts we're looking at. It's this purple dotted line here, right? Right here, it's at 376. There's big resistance right here at 375 area, right? Double top right there. Basically 377 being the top of that candle body. Okay, so I think we could get a move up. It'd be a great place to add to our swing or even buy closer to the strike. 162s, 165s for the same expiration. I do like. If you were playing those puts with us though on IWM, we bought the last time we were at 3,900 pretty much. And I mean, we had twice where you could have had anywhere from 50 to 75%, just depending on your position. So, I still like IWM for a long put swing as well. Especially how we know going into the FOMC LBC, if we do another 75-point base hike, rate hike, excuse me, Jesus, or if they throw in a little curveball with a full point, guys, the small caps get destroyed. Okay, because for them to survive, they have to survive on leverage usually. Okay, to have their operations run fluidly, they're not cash cows. Okay, so when it gets more expensive to borrow money, right, to allow their business to run, okay, it makes things harder for them. Much more headwinds than like an Apple that has like billions in cash. Okay, makes sense. Okay, but those tech companies still get hit too. So a SPY swing to the downside would still be good. What else do we want to talk about, Justin? Nvidia,
AMD, you have that chips coming up, chip
yeah,
bill.
Nvidia. I did
Nancy
like
exercised her calls to take comments.
Nice.
So on Nvidia.
Yep.
So
here we go, guys. Another 50 MA. Okay, green. It's not greeted.
Snap us how you are. I think it's on Friday, right, Brian?
Blue. Yeah. I mean, sorry, this green.
Thursday. Okay.
Green. Jesus Christ, guys.
All right.
God.
Perfect.
I've got a lot of sleep here. This purple dotted line is 168 right now. 168. Sorry. What do we see here? I mean, we see a pretty nice breakout, right? A pretty nice breakout of this downtrend line. Okay. And for me, for all our glizzy lovers, whatever the hell you guys want to call
you can just say
yourselves.
golden zone.
Glizzy just sounds interesting.
Sound nasty.
Okay. What do we see here? Okay. Is this not lining up almost perfectly? for our fib lovers here, right? A 50% retracement off this last high we had to the low would be 168, 50%, which would happen to be where the 50 MA is, right? Which would happen to be where the 61.8 is a few points higher, which is the beginning of a gap. Okay. Shit ain't by coincidence, y'all. Shit ain't by coincidence. So I do love this. They're talking about Tuesday. This thing's supposed to get passed. I think the best thing for a lot of tickers this week would be to have a down day tomorrow. Have a retest of like 380 SPY or 3800 SPY or SPX. Which ultimately, if you're looking on this chart here with Nvidia, would really just be a retest of the downtrend line breakout, right? We are above the 20. So another close above the 20 MA. I'm really bullish for this to just magnet up here to the 50. Okay. The 20 MA is this green dotted, which is at 157. Okay. We closed at 157, basically just above it. We gapped up a little bit after ours. I think they talked about that bill on Friday, if I'm not mistaken. Okay. So that's what I'm looking at. I really like that. Justin, if you want to add any comments on this Nvidia chart, by all means.
I mean, it's at a good zone. It's at a good level. We're at a demand level. So I would think that 161.
I wonder, you can't draw like a, it's the only thing I hate about. I mean, I guess I could do this.
Mr. King said he need the script.
I mean, kind of like this ugly inverse head shot. Look, there's a lot of bullish sentiment, a lot of bullish setups, biases, whatever you want to call them, into this chart here. I'm liking this to get up to at least 50% retracement, which would happen to be the 50 MA. So this will be on high watch for me tomorrow. For sure. I think Justin will be watching it too. Move drawing. Right. Getting above this 160 level, I think we run at least another 10 points. Truly. So let's see what happens there. What else? What other chart were we looking at?
I go to AMD real quick.
AMD too. AMD would be a little bit cheaper version, I guess.
It looks pretty though. It looks like it wants to go.
I mean, if you could do easily just another. Wait, that's not what I wanted. Sorry. This one. Let me take it from. Oh, come on now. Jesus. Okay. 50 MA is dancing where at the 50% retracement. This shit is not by coincidence. Okay. Say that over and over again. I would look though, at least to get up this 38% retrace. That's a 6-point move to get up to 86. You see big resistance there, obviously. So we're above the 20 now. Okay. So that's good. This is talking about maybe wanting to get up here to 86 then 90. I would think if you took any calls on any pullback here, probably 86 would be a good level to definitely take some size off. Because these contracts, they're decently cheap. The Melsky Midnight Movers channel, or what is he called now? The Blueprint. The Melsky Blueprint channel, guys. Check him out. Melsky Trading, one of our great admins. He crushes AMD. Like he plays it like we play SPY for the most part. Okay. He knows how it moves very well, just like the back of his hand. Okay. He has very precise levels. Check out his channel. I don't know if it's going to be on his watch list tonight. It usually is one of them. Okay. It definitely usually is one of them. All right. But yeah, I mean, I do like this. I like this chart as well, especially with the, with that bill, I'm afraid if we front run really big into the bill, I would be afraid they sell the news. Okay. That's why I'm thinking tomorrow would be the best day to have a pullback. Okay. Personally. So something just to think about too, right? Because if you think the people that already knew about the news, they're probably getting in or down here, right? They knew about the bill already. They're probably in down here. That's all I'm saying, right? You got to think about that, guys. You don't want to chase that. Okay. That's why we're talking about if they're, we just got through this resistance, right? This is huge resistance right here. This 80
was massive.
Huge, right? We couldn't. So wouldn't it make sense to back test maybe a little wick down for you to get in, then we go higher? Okay. And maybe just confirm that we hold 80, right? Does that resistance become support? Guys, patience will always be like your absolute key to being successful. Don't rush anything. Okay. Be patient. Yeah, that's what I do. I mean, it's still really falling this entire downtrend channel. I haven't really messed with this chart in a long time now that I'm looking at it. I drew this a long time ago. But yeah, I mean, realistically, it just wants to keep going like that. Oh wait, I didn't even get to the high there. Whoops. Nope, that's not it. Jesus. Sorry, guys. What the? Get the fucking, thank you. Right? So then,
It looks so nice.
back up. This looks really nice, huh?
Yeah, it looked really nice.
That's a nice chart. Okay, that's what I got. Justin, you have anything else you got?
I think that's
we
it.
didn't touch on? Yeah, I think we hit it all. As far
This
as
week will be interesting. Got the earnings, and then yeah, FOMC the following week and some good numbers. So yeah, the rest of this month is going to be very interesting. Some big things coming out
I
that we
want
need to keep watch on.
Yeah, this is interesting right here. I do
Oh,
want
the
to show
VIX,
this,
yeah,
right?
yeah, yeah.
The VIX is in this area where it's right off this 200-day moving average again, right? Are we expecting a bounce at some point? Are we expecting to come off this trend line maybe? Okay, so we can go even a little bit lower. I'm definitely going to be looking at playing the VIX calls. The VIX calls going into the FOMC week. Okay, because volatility always seems to get a little bit nuttier out there. So let's see what happens, right? We'll just see what happens. Other than that, Justin, that's all I got, guys.
I think that's it.
I can hit these SPY levels real quick, actually, if you guys just want to, if you forgot for some reason. 370 to 374 major support, 390 to 392 major resistance, right? Everything in between that is fluff. Okay. If you were just patient in the last month and you took 1 trade, 2 trades, 3 trades, 4 trades, 5 trades, imagine taking 1 trade a week, but you bought a month out and you let the whole play develop. How much money would you have made versus you trying to guess the intraday action? Okay, that's what I want you guys to think about. Zoom out and be patient. Okay, zoom out and be patient. Okay.
Yeah, I think we're
what
gonna
I'm
start adding
challenge
more
it.
swings.
Yeah, that's
So
I'm also, yeah, we're also looking to add a little bit more of the swing play as well for you guys, because it's just easier, especially if we know we're in this huge, I mean, this range is just staying in a range. The longer you consolidate, the bigger the move happens. The bigger the base you build on, the higher the skyscraper, right? So just something to think about. But yeah, that's, I mean, obviously 384 we got through. So 390 is going to be the next level, 393 above, 395, 96 starts to gap up to 401 underneath 370. Get out of the way because we're definitely going to new lows. Okay, 365 below that, 362 major level, definitely a bounce there. Risk reward on a call would be probably pretty decent there. But I think ultimately we make it down to this 350 level on the next leg down if we get underneath 370. Okay, that's it, guys. Get your levels right. Enjoy the rest of your day, and we'll see y'all bright and early in the pre-market.
sure.
Peace.